Hello. Hello, hello. Happy Sunday, everyone. How are you all doing? I hope you're all doing good. Let me know how your portfolios are all doing at the moment. I know that we've had quite a few dividend cuts recently, including Rio Tinto, which is a stock that's probably in quite a lot of my viewers' portfolios, I imagine. So yeah, let me know. Do you have Rio Tinto? Has the dividend cut worried you at all? Have any other companies that you've got cut their dividends, or all the earnings reports that have been coming out? Has there been anything interesting in any of those? Let me know. Can see some people join in. Good afternoon. Hi, Chris. How's it going? Hi, Sean. Meggie, hello. How are you doing? Knowledge Seeker. I like the name. Hello, hello. Jason's blog. Hey, how are you doing? What's your big mistake on the stock market? It's a good question. I guess you're asking me what my biggest mistake in investing has been so far. I think that's what you're asking me. I guess the cliche answer would be to just not have started sooner. But I still started quite soon, really. I started investing in 2020 and I've just turned 27. So I started relatively young, but of course, I'd have liked to have started even earlier. Apart from that, I would say just not really trusting my gut and thinking that I had to do one thing or another. So, for example, if I was interested in dividend investing, then I had to be all in dividend stocks and I couldn't have any other companies within my portfolio that didn't pay a dividend. And that's just not the case. Like, just do whatever motivates you. You don't have to do a certain type of investing. You don't have to do one over the other. You can mix it, do whatever motivates you and what you feel is right for you at your risk portfolio, your age, your situation. AEMJ, what's all this about a podcast then? Yes. So I've been thinking that I would quite like to start a podcast about investing and personal finance and just get like some guests on and chat to them about their experience and just learn from each other, because I've been on a few different podcasts recently, or just a few different channels chatting to different people, and I've really enjoyed it. I've really enjoyed asking them questions about their stocks, their portfolio, their investing strategies moving forward, personal finance stuff, and it's been so interesting. So I'm kind of thinking that I'd quite like to start one, and just like chat to people, learn about them, etc., etc. So let me know, do you guys think that would be an interesting idea? I know everyone's doing a podcast at the moment, but they're really fun and it's really interesting. So I don't know. And if so, do you think I should just like add a playlist to the channel and have like a podcast section there, or have a separate channel for like the long style podcasts? I don't know. I'm a little bit confused. I'm in the early days. So if there's anyone in particular actually that you would quite like me to speak to if I were to start a podcast, again, let me know. Bear in mind that the channel has about 4,000 subscribers, so it can't be anyone that's absolutely out of that reach. But let me know what you guys think. Thank you. Hello from Lithuania. That's very cool that you're all the way over there and you're watching the channel. Glad to have you. Belly Pork, how you doing? Hope you had a good week. Yeah, I've had a good week. It's been a really busy week and weekend, actually. I'm just trying to post as many videos that I feel are valuable on the channel at the moment. So it's kind of felt like nonstop, from 9 to 5 work to YouTube to everything else that I've been doing. So it's been very busy, but very good week. I always feel good when I'm being productive. So I hope your week's been good too. Oh, by the way, this live is just going to be chats, questions, whatever you guys really want to speak about. I love speaking to you also. whatever topics really come up, we can just chat about. Okay, so there's been a dividend 10 to 3. Ouch, that's quite a big cut. That's quite a big cut. Sean, are you still holding this one, or like what's your thoughts now that they've cut their dividend? That's quite a big cut, actually. The divvy cut. I like that. Yeah. It's disappointing. I think with any dividend cut, you need to look at a few things. I think you need to see, is this a company that regularly cuts their dividend? If it is, then, depending on your feelings, you might not want that company anyway. But if it's a company that doesn't regularly cut their dividends and they've done it as a one-off and there's good reason behind it, they've got their reasons and they're using that money to grow the business or whatever else they're doing, or perhaps it was just out of their control, then, I'm just trying to say, like, think of the context and why the dividend is actually cut. Because it might be a company that you still really like and you still really believe in. And, it sucks, but it might be okay. Yeah, I feel like hindsight is such a great thing, but the important thing is just to start. And someone that started at age 51 compared to someone that didn't start at all, massive, massive difference. So just start, honestly. That's the best thing. Yeah, there you go. Better to start late than never at all. Completely agree there, Chris. Completely agree. It's interesting because when you look at the compound interest calculators online, and you put in, this many years, add in this much to the portfolio each month or whatever it may be, you still see that the portfolio is more than you probably thought it could be when you only put in a little bit in or you started late. So yeah, definitely starting and just being consistent is going to pay off. Yeah. Cool. See, again, it's just about starting, isn't it? And then just being consistent. But I'm going to open Jason's question up to everyone else. Have you had any mistakes since you've been investing, or I guess things that you wish you'd done differently looking back that isn't just starting earlier? A temporary cut. Yeah, we could see that they go on and they raise their dividends again, and we're all very happy, but I guess time will tell. You just got to decide whether you still believe Rio Tinto at its fundamental, at its core, is still a good company. And if it is, then I guess you just have to look past the dividend cut. And it does suck because typically when a company cuts its dividends, it can be a bit of a issue and it can highlight some maybe problems with the company's finances. Like, why are they cutting their dividends? But if that's not the case and it all seems okay, then, carry on investing. And when a company cuts its dividends, it often causes the stock price to go down, which again could be an opportunity. Has the Rio cut taught you anything about dividend traps? Not really. Like, it's a mining company. It's so volatile, and a high dividend like it had is maybe not sustainable. So it might just happen that they do cut their dividends or whatever may be the case. I think I'm very alert. I'm very aware of high dividend yields and dividend traps in general, that I tend to try and stay clear of the really, really high ones for this exact reason that you've pointed out, Sam, your dividend traps. But yeah, I think before they cut their dividends, that was the highest dividend yield I had. So I'm honestly not too phased by it, to be honest. I would invest in index funds, and if we get the dividend, it's a plus point. Yeah, I have VUSA, VUSA, which is an S&P 500 ETF. And the main point of that ETF is not to pay a dividend, but it just happens to pay a dividend. And the dividend that it pays is really, really small. And it's almost, it's kind of insignificant compared to these massive dividend yielding companies, but I still want it. So like you said, the fact that it pays a dividend is just a plus point. So I like your thinking here. This is a similar one. I don't invest for dividends. They are just a bonus. Yeah, I feel like although I'm motivated and I like dividend investing, it's not the only thing I look for. I don't only want dividend paying companies. I want companies that I really believe in and that I really like. And if they pay a dividend, then great. And if they don't, then fine. It is a bonus to me as well. There's a lot of UK companies that I really like that just happen to pay a dividend. They seem to be in the UK. They seem to be really heavy on dividend payers. So just by that, I've ended up with like a dividend portfolio. But I wouldn't, I have other companies in my portfolio that don't pay a dividend, and I'm not about to get rid of them because they don't. I completely believe that you can have a dividend portfolio and you can also have a growth portfolio. You can also have other companies in there. You can have ETFs, you can have individual stocks. Just honestly, just do what works best for you. That makes you feel younger. That's funny. Okay. So when they cut their dividends that you were saying earlier, you then kept the amount of shares that equaled the profit from the gain and reinvested. Okay, yeah. I did a similar thing when Rio just happens to be the same company. When they were on their run and they were really increasing, I sold a little bit at a profit and then put that into a different stock that was on a bit of a discount. So I did the same sort of thing. Just because I didn't see it carrying, like I didn't see it keep going up and up and up. So I thought I'd just take some profit and put it somewhere else in the portfolio that was a little bit of an opportunity at the time. Again, just starting investing is so much better than not starting at all. I'm gathering that lots of people are wishing they started earlier. Wow, that's a lot to be putting every month into a pension. Go you. Well done. That is amazing. That is amazing. So you got stocks and shares, ISA, and a pension. Nice. It's going to pay off. Keep going. Keep being consistent. Yeah. So this is a regret, like a mistake that you made, I guess. Rolls-Royce has been they recently had their earnings report, and as far as I'm aware, I don't have this company, so I've not looked into it too much, but as far as I'm aware, they had quite a good earnings, right? They had quite a good earning report, and I think the stock went up since then. Like Warren Buffett said, it's time in the market, not time in the market. Absolutely. Has anyone read any of the Warren Buffett letters to shareholders? Because there's just been another one released. You don't need to spend like ages reading all through it, but it's worth just looking at the highlights from it. It's absolutely crazy how much they get. I say Warren Buffett, but I guess I mean Berkshire in general. How much Warren Buffett gets from just dividends from just Coca-Cola alone, or just one of his holdings. It's mental. And then you think he's also getting dividends from all the other companies he has, which are pretty much all dividend payers. And then on top of that, he's getting the capital appreciation just from the stock. It's honestly mind blowing how much some of those dividends are. It's crazy. Okay, this is a good one. Without doing due diligence. I think that's so important because I guess with social media now as well, you're always hearing about what everyone else is doing, what stocks everyone else is buying, and it's really easy to get FOMO and to think that you're missing out and you must jump in now before you miss the train and you miss the next big win and you miss the next 10 plus stock, whatever it may be. But this is a really good point. The stock will be there tomorrow. Yeah, it might go up in price slightly and you might pay a slightly higher price, but chances are it's not going to go up by crazy amounts, and it's worth taking that extra time to actually investigate that stock and research it and seeing if it is one that you really want in your portfolio. This is a really good point, actually. And I definitely, even now, like sometimes I see a stock that's at a really good price and I panic that I need to buy it right now or I'm going to miss my chance. But time in the market is more important than time in the market. And definitely spend time doing your due diligence, because It's absolutely important. No one cares about your portfolio and cares about your money more than you. So just take that time. You've got the bug. Yeah, I've got the investing bug as well, belly pork. Don't worry. Pretty much all I think about. Once you get interested in investing, it feels like that is all you can actually think about. But I suppose there's other things that you could be obsessed with that would be way worse. Way, way worse. Thank you, by the way, guys, for joining this live stream on a Sunday. Thank you. Thank you. 2 stocks I first bought my energy companies going bankrupt. Okay. Or at least Googling the ticker. I like that. Do you know, losing $45, although that sucks, imagine if you didn't learn that lesson at that point. What could that loss have become? If you had carried on just investing into anything without looking into it first, you could have ended up losing thousands. So it's kind of like a good thing that happened to you early on. By the way, I've got a video coming out at, what's the time now? 5:30, which is going to be a premiere. Please watch it. I'm really, really happy with the video. It's really an interesting topic. So do head over there at 5:30 GMT and let me know what you think of that one, because I basically, without ruining the video, I basically came across this concept recently that's kind of sort of adapted the way that I'm viewing investing, not in terms of like I've got a completely different strategy or anything like that, but using this one concept, I'm now like finding different stocks and different sectors that I want to invest in moving forward. So yeah, let me know what you think of that if you go and watch that video. Man United. For those of you, I guess everyone that's interested in football will know who Man United are. But for those of you who aren't in the UK, Man United is one of our biggest soccer teams in the Premier League. Yeah. And the companies are riskier. Talking about risk, actually, I know this is a little bit off topic to this comment, but what do you guys like? What's your level of risk, would you say? Are you quite a risky investor? Do you have quite a lot of riskier investments, or do you like to be quite safe, stick to the boring companies, the stable companies? And I use the word boring. They're not really boring. You know the ones I mean, like the ones that you have heard of for most of your life and they're very stable. They pay you a nice dividend. What's your sort of attitude on risk? Because I feel like I have quite a split in viewers on the channel between being quite risky and quite not risky. This is an interesting question, because given that the FTSE 100 has been insane recently. We've hit all-time highs, which has been incredible to see. And it's just I don't have a FTSE 100 ETF or index fund, whereas I do have an S&P, but I do also have UK stocks. So I think it's been really cool to actually see the FTSE 100 doing better than the S&P 500, because in my time of investing, I've not really seen that so far. So that's been really exciting. Which one do I think will do well in 2023? People, let me know your comments below. I think it depends what is generally happening, because in the UK, we have a lot of the really, I want to say stable, boring companies, whereas the S&P has a lot of the tech companies, the more exciting companies. And those two things tend to do well at different times. So I think it's going to really depend. I'm not betting on one against the other, because I just want exposure to both. But yeah, people, let me know what you think. A lot of people will also say that the S&P 500 is still really overpriced. So let me know what you think of that too. Yeah, this is true. This is true. For me, I'm not too concerned because I'm quite a way off retiring. And also, my plan at the moment is to have dividends cover a lot of my monthly expenses. But on top of that, I'm kind of the opinion that if I need to withdraw 1 or 2% or even 3% of the net worth of the portfolio every year to live on to add to those dividends, then I'm okay with doing that too. FTSE cheaper, has more. Okay, yeah, this is literally what, yeah, I was saying. So the FTSE, you tend to get the more defensive stocks. That's a good way of putting it. That tend to be a dividend payer, which is what I was saying. Where I was saying that I wasn't picking dividend stocks necessarily, but the stocks in the UK I wanted all happened to pay a dividend. It just worked out like that. S&P still is fairly expensive. Good afternoon, Fast Eddie. Good afternoon. How are you doing? Are you based in the UK? I guess so, because you said it's your afternoon, I guess as well. Buy high, sell low. That's the way to do it. Okay. I'm guessing you're being sarcastic here, Ian. Has anyone recently added anything to their portfolio? Any new stocks that you've added or any that are on your watch list maybe? I always like people telling me what they're looking at and what they've been buying because I like to research it and see if it's of interest to me as well. I could, yeah, I could. They're not separate portfolios, but I kind of tend to view it as like two separate portfolios. So I have my dividend portfolio where I get the dividends and I reinvest back into the portfolio. And then I have my growth stocks or my other portfolio, if you will. But yeah, I could do that. Could do that. I'm a bit behind on these comments. I'm flicking through them. Bear with me. My first mistake was buying on a trading platform. My first year, 3 trades a month gave 3 trades next month. I ended up buying and selling just to keep it free next. It took a while. Yeah, I think as well, like it's really important to look at the fees that your platform are charging you because they really, really add up. I saw something the other day, I think it was on Twitter, where it looked at 2 portfolios that were pretty much identical, but one of them was on a platform that charged more than the other one. And the difference after decades was insane. Like you don't think it's going to add up that much until you look at what it means over a long period of time. And then it becomes crazy, 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 crazy. In terms of dividends, I would invest in Unilever, GSK and BP for UK only if I consider myself for dividend income. So out of those, I only actually have Unilever. Don't have GSK, don't have BP. But again, they're really, really popular companies in the UK for dividend investors specifically. Question, actually, again, another question. What if you had to invest in only one stock? So you can't pick an ETF. You have to pick one individual stock. It can be a dividend stock. It can be a growth stock. It can be whatever you want. But you had to bet everything you had on just one stock. What would it be? What would it be? An ISA, yeah. Yep. If you're in the UK, a stocks and shares ISA is going to be your best friend in investing because of the tax advantages it gives you. So important to learn about this. So important. Do you auto invest your dividends into the same stock? No, not necessarily. So you can depending on what platform you're on, you can choose to do like auto drip, which is where automatically the dividends that get paid then go back into the same stock that paid you those dividends to buy more shares. That is a very passive way to do it and very easy, but I prefer doing it manually because I love investing so much. I kind of like the dividends to come in and then I decide where they go. And sometimes that's into the same stock that paid them. Sometimes it's into a completely different stock. I kind of just see how my portfolio is doing in terms of balance, what sectors need rebalancing perhaps, what companies are currently at a little bit of a discount. I'd take lots of different factors, and then I decide where I want it to go. But yeah, I don't automatically reinvest the dividends into the same stock. Quite a few REITs. Do I have any? Yeah, I only have one REIT at the moment. Was considering adding some more. Oh, you've said what you've got. Okay, realty income. Yeah, okay. The first two that you've listed there are two that are on my radar as well. I believe as a UK investor, even in US REITs, you have to pay a 15% withholding tax. So I'm probably not going to add both, but I would quite like one of these, to be honest. But I don't know which one I'm going to add first. Do you invest in covered call ETFs, and what has been your experience with them? Nope, I don't. I don't plan to either. I just no, it's not really interested me up until this point. I think there's a little bit of risk involved, and I'm quite happy just continuing doing what I'm doing. But I also have seen quite a lot of people do very well from them. But yeah, it's just not really for me. Big mistake. I went back a few years and calculated how much dividend compound I've lost, not investing my savings early. Yep. Again, the difference between saving in a normal savings account versus investing is absolutely huge. And starting early is always going to win over starting later. But just starting at all is going to be the best thing. Do you put money consistently, or when you, I don't know why I read it like that. Did you put consistent monthly, or when you had, I guess you're asking me, do I invest at a consistent time point or just when I have money? Kind of both. I make sure to invest pretty much every single month. If it happens to be my birthday, or for whatever reason I get a bonus at work, I get some more money, then I'll probably just invest it. But yeah, I just try and be consistent every month. And then if I've got some extra money, it'll probably go in there as well. I know quite a lot of US investors invest more frequently. So they do like bi-weekly investments or weekly investments. And I guess that's just because typically in the UK, we get paid from our job monthly. Whereas in the US, as far as I'm aware, most of them get paid bi-weekly. Oh, what am I doing? Okay, I'll come back. I went back a few years and calculated how much dividend. Okay, we've just done that one, haven't we? I think I clicked on the same. Hi, Adam. Hello, hello. How are you doing? Adam, you always are here supporting. I appreciate that. Thank you. Thank you. A lot of you guys come every time and comment on the videos, and honestly, it means a lot. Thank you. Do you know the channel has just gone over 4,000 subscribers, which is really, really cool. I didn't think that it would ever get to that much. So it's going to hopefully just keep growing. The stocks you invest in are all boring. There's nothing wrong with that, is there? There's nothing wrong with that. It just depends what you want. A lot of the boring companies are the really, really stable, safe dividend paying companies. So yeah, why not? I have a lot of boring companies, but I also have some companies that I believe in for the future that aren't that boring in terms of the traditional boring companies, like Tesla. 9 out of 10. Is that 9 out of 10 as in riskiness or non-riskiness? I'll be risking my investments when I have too much income to throw away. Yeah. I guess that's what you've got to think about, haven't you? Like, how risky are you willing to be is how much money you're willing to lose. With risk comes reward, but with risk also comes the possibility of losing. Yeah, that's a good point, actually. How long you have before you're looking to retire normally indicates the level of risk you're willing to take. I can't remember what the calculation is, but there is a known calculation out there where you take your age, you minus a certain amount of years, and that's a percentage of equity of stocks you should have in your portfolio. I think take it with a pinch of salt, like determined how risky and what sort of individual stocks, ETFs, bonds, and everything you want in your portfolio as an individual decision. But it's nice to get an idea. Buy quality, only dabble in risky stocks. Yeah. I guess you could also say that risky. Okay, here's a question. I would argue that I'm going to use Tesla as an example again. I would argue that Tesla is a quality stock, but it is also more risky than, let's say, Diageo. Completely different companies, I know, but I'm just putting it out there that I would say that it's risky and also quality. Riskier, not risky, riskier. But that's just a personal opinion. 5 to 10% in risky speculative stocks. Okay, so you limit it by a percentage of your entire portfolio. So 90 to 95% is more safe and more stable. And then you put an allocation of your money into perhaps riskier speculative stocks that could do really, really well and could, come out to be really big winners for you. But equally, if you lost that money, it's a small percentage and you're okay with that. That's kind of how I view it as well. Not the same percentages necessarily, but like I think of it as a percentage of my portfolio. Chunk of crypto. Okay. Yeah, some people would argue that crypto is more risky than any equities. And some, okay. That makes sense. Like I probably want my pension to be relatively boring, and I don't want to take any risk when it comes to that. Interesting about the crypto and not individual stocks. Is that because you think crypto is less risky than individual stocks, or is that because you just don't want to spend time researching into individual stocks and what ETFs do the same, so you might as well have that? What crypto are you interested in? What crypto are you interested in? Back to the S&P versus FTSE. The UK is killing its competitiveness for business these days. I suppose just by the number of stocks in the S&P versus FTSE 100, the S&P has more companies in it. It has 500 and I don't know, over 500 companies, even though it's called S&P 500. Whereas the FTSE 100 has 100 or 101. If I had to only pick the S&P 500 or the FTSE 100 to back, I would go for the S&P 500 because I think it has a lot more of the companies that will continue to do well over time. That's my reasoning. It's really interesting to hear about your portfolios because usually I'm the one talking about my portfolio and sharing my portfolio, and I don't really see or hear yours. So that's interesting. My investment ETFs are 80% US, 10% FTSE, 8% developed world, and 2% REITs. Nice. So my biggest holding is in VUSA, US ETF as well, 10%. So are you? You might have said earlier, but I guess you're 100% in ETFs apart from your REITs, maybe. Okay, what are you all saying about Palantir? Are you saying yes or are you saying no? Because this stock seems to be more love and hate than any other stock I've seen. Some people just think that it's going to do crazy well. Some people think that it's going to go nowhere and it's another one of these FOMO hyped stocks. Yeah, it's an interesting one. It is an interesting one. Let me know what you think of that one. Okay, thank you, Adam. That is good. I've seen a few people put a thumbs up, which I'm assuming is about a podcast. I would really like to do it. I would really like to. And again, let me know if there's anyone in particular you want me to reach out to. They can't be someone with like 1 million subs because they're probably not going to want to come on a podcast with a smaller channel, maybe. But let me know and I'm going to look into who I can interrogate about investing. Yeah, we need to see what's going to happen. Macroeconomic situations are going to definitely impact this. US raising their interest rates. What's DMLP? DMLP. I know the other two, but DMLP, don't know which one that is, but nice. Good long term. Okay. I guess you could argue that is one of the riskier ones as well. It's really subjective though, isn't it? It really is subjective because, for example, if you are all in on one company, you're fully confident and you have full conviction for that one company, then you would argue that that's not risky at all because you just know it's going to do well. You've done your research. You're really confident. But to other people, that would be a really risky move. This is interesting that you said this, Jonathan, because the video that I've got coming out after this live stream at past touches on the renewable energy sector. So very interesting. And from the research that I did for that video, and you'll see the video if you watch it, not financial advice, this is just opinion. I feel like I always have to say that. I think renewable stocks will do well. I think it seems to be the future, right? It seems to be the future. Can trading 212 take our money like crypto platforms done to people? I mean, I doubt it. You'd have to look into, not with just trading 212, but any platform. Are they regulated? Is there an insurance in place? How much of your money is protected? All things like that. Oh, my voice. With a lot of the crypto platforms, there was just a lack of regulation behind it. So just have a look into it. Have a little look into it. But typically, the big platforms are very regulated. They have an amount that your money is protected. So I don't think you need to be as concerned about that. A lot of people are saying Tesla, look, as their one stock that they would go for. And I think that I would answer the same, honestly. If I had to have just one stock, I think it would be Tesla. Apple, that is an interesting one as well. That would be one of the top that I would be thinking about. But I think I would say Tesla for me, and that's just a personal decision. Okay, that's interesting, Ian. I need to ask you, if Apple would be the one company that you would go for, why is it not currently in your portfolio? Unilever or GSK? Okay. I definitely see the point of Unilever, actually. Just because of how many products they have, the diversification of the revenue streams, that would interest me. Airtel Africa, if they don't go down the cable route. Airtel Africa is my one of my newer additions to the portfolio. Tesla is a bit risky. See, this is what I mean. Some people would argue that it's not risky because they have full conviction that it's going to do really well, really wonderful things. Some people would say that it's quite a risky move. Compounding investor. Hey, thank you for joining the live again. I always appreciate it when you come and have a little chat. Unilever. Is that because well, why is that? I guess I imagine that there's a multitude of reasons as to why you would say Unilever. Dividend growth, maybe. The dividend that it pays, maybe. The brand and the portfolio and the customer loyalty. I think that's a very good answer. I'm with you there. 20K. Wow. That's an impressive move. And that is definitely going to boost your dividend income for sure. Oh, Surfside. I like that. Surfside and DAS. So is your whole portfolio VHYL, or have you got other things going on as well? Bean Count, thank you for writing this. You've said what I've said in a better way and a more succinct way. So thank you. So yeah, crypto platforms weren't regulated. Trading 212, however, is a regulated platform. You get the 85,000 protection. Exactly what I was saying. So I think you just need to look into the platform that you're interested in and make sure that it fits this criteria. Whereas a lot of the crypto ones had problems. And that's again why, if you're interested in crypto, I think getting a cold wallet is really, really important. Yeah, completely with you there. Completely with you. Shout out to the compounding investor. I think we all have an idea how to invest, but it's each to their own. You learn from your mistakes, so carry on what you're doing. I've been investing for 30 years and you're doing okay. Thank you. Completely agree. You learn as you go. And I think it's really important to actually just get going and accept that if you invest into something that you then need to sell, or whatever the reason, that's okay. Because when I first started investing, I very much thought that once I add a position to my portfolio, I couldn't get rid of it. Like, it was there, it needed to stay. Buy and hold, buy and hold, as Warren Buffett always says. Long-term mindset. And that is all still true. And I believe in that 100%. It is also okay to sell a position sometimes, whether you realize you made a mistake, whether you realize that money is better elsewhere, whatever the reason. So yeah, 100% agree with you there, George. Smash the like button. Thank you for doing that for me. I always forget to say stuff like that, so thank you. I haven't actually watched your earlier video, so I will watch that tonight. I'm a big fan of the Compounding Investors channel. If you haven't already, go and check it out. If you love dividend investing, especially, go and check it out. Do you know what I really love about the Compounding Investors channel? Is it's really good motivation to see where you can get to if you're consistent, because it's really easy to feel demotivated when you first start out and your portfolio isn't big. You're not getting loads of dividends. Things seem to be not really growing very quickly. You're not getting much compound interest. All of those things happen for everyone when they first start out. But if you're consistent and you carry on and you show up time and time again, your portfolio can become something big and your dividends can sustain your lifestyle. What is my biggest goal for investing? I guess I want to have financial freedom, not necessarily retire early, although, the option to do so would be nice. And that's my biggest one. And just to have enough money that I'm secure, if that makes sense. So I guess financial freedom would be the overarching theme of the reasons for investing for me. Do you use general investment accounts, allowances? Hang on, I read that all wrong. Or just use the ISA? At the moment, so I do have a general investment account, but I don't really add to it. It kind of just has some stocks that I put in there a long time ago and I just leave them doing their thing. But no, at the moment, I'm not in the position right now to max out my ISA every single year. So I'm always going to prioritize the ISA over any other type of account. So yeah, just ISA right now. Hopefully, one day I'll be in the situation where actually I'm like, oh, do you know what? I've maxed out my ISA. I need to look into the general investment account. But unfortunately, right now, just not there yet. So I'll prioritize the ISA. $120 minus the age. Okay, that's what we were talking about earlier. So 120 minus your current age will tell you, take it with a pinch of salt, but it will give you an idea of what the suggested amount of equity you should have in your portfolio compared to like bonds or whatever. I think that's the idea. I'm going to open this question up to everyone to answer, because the more answers Elliot gets, I guess, here, the more interesting. At the moment, Elliot only invests into ETFs, but what are some of the benefits to dividend paying individual stocks? For me, it was a mixture of things. So with ETFs, obviously, you're getting a collection of different companies, but I wanted to have more. I wanted to have more control over exactly what companies I had in my portfolio. So with individual dividend paying stocks, obviously you can select exactly which companies you want. Whereas with ETFs, you are having all of the companies that come with that ETF. Pros and cons to that, of course, but that was one reason. Other people, let me know what you think of this question. I can't do this for too long because of the video coming out, but we'll stay for a couple more minutes and get through some more questions. And if you guys like these live streams, I'll keep doing them. So let me know. I really enjoy them. No, I have not. I'm not really interested in trading at all, to be honest. I don't really have the stomach for it. I just prefer good old investing. Nine different stocks. Okay. So do you have just 9 individual stocks, or do you have ETFs? Are you including ETFs in this? I'm guessing not. You're just saying 9 stocks. It's interesting, isn't it? Because some people would say you need loads and loads of stocks to be fully diversified. Other people would say that maybe less is more, and having less means that you know more about them companies. I kind of see both ways. Yeah, crypto is really volatile. I feel like if you're going to be all in on crypto, you do need to have the stomach for it. I'm a fan of crypto though, but it's not the biggest portion of my portfolio. Okay, global exposure. Yeah. I feel like for a lot of people, having an ETF or an index fund, whatever, makes the most sense. Lots and lots of stuff going on here about crypto. Seems like quite a lot of people actually are big fans. Lots of different people, lots of different coins being mentioned here as well. Got some Bitcoin, got some Ethereum, and then we've got lots of people mentioning different altcoins as well. Love to buy Tesla, but Elon Musk is so off-putting. I like Elon Musk, but yeah, he is a bit what's the word? Not controversial. Like some people just really don't like him. Lots of people seem to have opinions of Elon Musk. Apple's not in my portfolio because I have a position on Microsoft and other more risky companies I believe in. Apple won't 10x. Yeah, I suppose that there's an argument of these companies that have already done so well. How much further can they go? It's interesting that you love Apple enough to say that it would be one of your holdings if you had to have one, but you don't want it. But I do understand your reasoning there. Risky Microsoft. Yeah, Microsoft's another company that I want to look into as well. Well known for their product diversity and dividend growth plus solid shares. Yeah, 100% with you there. The reason that it's in my portfolio. Hello, hello. Yes, I love this. I love this idea. Compound investor would definitely be someone I would want on the portfolio. We might have to do a faceless podcast, maybe. Okay, I'm going to leave it there because the premiere is coming out in just over 10 minutes. So please go and watch that when it comes out at 5:30 GMT. It's a video, like I said, that I'm really proud of, and hopefully it will be very useful for a lot of people wondering what they might want to invest into the future. It's definitely opened my mind up a lot, so I'm excited for you all to see it. I'll be over there on the premiere, so if you come, do let me know that you were on this live stream. I'll probably recognize your name anyway. But yeah, thank you all of you for supporting the channel and for coming to these live streams and getting involved, asking questions, talking to each other. Love to see it. So thank you so much. And I'll see you on another live stream very soon, and maybe at the premiere if you decide to go. But thanks again, guys. See you next time.